Income tax 2020. Income Social Security benefits. Come in, relax with income tax 2020. Income Social Security benefits. When thinking about Social Security benefits, we're still on the top line item on the income line, thinking about our income tax equation, the top half of the equation basically being a modified income statement, the bottom half of the equation being the tax calculation, as well as the payments and credits to then get down to the tax refund or the amount due. We're focusing in on the items up top, basically the income statement, specifically in line 1, basically the revenue item. Remember, when considering the revenue or income side of things from a tax perspective, the first question, is it something that needs to be included in income? The second question, if it is included in income, is there going to be just ordinary income rates that will be applied to that income, or are there some kind of special rates that will be applied to it? So we're talking here about Social Security benefits. These are going to be benefits that are paid out rather than the taxes that are paid in. So as we go through our working career, typically we work somewhere where we have to pay Social Security and Medicare at some point along the way. Usually they're going to be payroll taxes that will be pulled out of our wages directly from the W-2 wages. If we're self-employed, we have to pay self-employment tax to go into partially the Social Security program. And then at some point we may get benefits from it. That would be at retirement age, which might be like 62 and above. So if you're doing tax preparation for people that are 62 and above, then you want to keep in mind the Social Security benefits. You will be receiving documentation for it, or they should be receiving documentation if they received Social Security benefits, just like basically anything else, a form of 1099 type of format that's going to be saying the government has paid out benefits for Social Security to them. Then the question is, should it be included in income or not? And that gets a little bit more complex with the Social Security because in part, it's basically a benefit type program. So you would think in that sense, it shouldn't be included as income on the top line item. But more and more, it's kind of actually moving towards to almost like a government retirement kind of program. So it is going to be included, or you would think that it might be included in that case. And some of it may be included, basically, is how it works out. And it gets a little bit complex, so we've got to think about that. So here's the 1040. The Social Security will be on the first portion of the 1040 when we do the actual calculation down here, which starts here on line 1. We're going to be down here on line 5A, Social Security benefits. We got line 5A, and then the taxable amount of the Social Security benefits. So you can see just from the layout, and I know this is small, we'll do this again in the following presentation when we actually do practice problems into an actual tax return, so we can see it a little bit more clearly then. But you can see from the layout that we have the Social Security benefits, and the taxable portion would indicate that possibly not the entire amount will be taxable, which will be the case. Now then, you're typically, if you look at tax software, and we'll consider this when we enter the data into the system, in the following presentation, you can kind of see the calculation. It'll go through this complex or seemingly complex, has a lot of steps at least, calculation for the amount of the item or the benefits that will be taxable. In other words, the amount that will be included in income on the tax return and then have tax then be applied to it. Now, we're going to want to go over the general rules for the amount that would be taxable so you can have a discussion and a conversation with a customer about, or a client about, Social Security type benefits and the taxability of them. And then, of course, in practice, once you do the data input, you will be relying to some degree or on the tax software to help you out with the calculation. So you will be receiving then, if someone has Social Security benefits that they received from the government, they're not paying them in, well, they might be paying them in, but we're talking about the amount that's being paid out at this point in time. Then you will be receiving a form SSA 1099. It's another kind of 1099 type of form. Just like any other 1099, we see a 1099 and we're thinking, okay, this is something that potentially could be income. And obviously the government has a copy of it because the federal government is the one that's paying out the Social Security benefits in the first place. So the Social Security benefit statement is what we have, the form SSA 1099. The taxability of it. Part may be taxable. Part of the Social Security benefits may be taxable. Provisional income or modified adjusted gross income must be calculated and compared to the threshold amounts. So again, that's a it could be kind of a complex type of calculation. We'll see it in the tax software. Let's go over kind of the general rules at this point in time. Calculating Social Security income tax. The amount you pay in tax will depend on your total combined retirement income. You will never pay taxes on more than 85% of your Social Security benefits. So when you think about the general question and someone asks you, is Social Security income taxable? Your answer is, well, it could be, partially could be. It'll depend on how much income you have to some degree, but it will only be taxable up to the maximum of 85% of your Social Security income. And then to get into more detail with it, for 2020 tax year, single filers with a combined income of $25,000 to $34,000 must pay income taxes on up to 50% of their Social Security benefits. So if you're between the $25,000 and the $34,000, up to 50% of the benefits. If your combined income is more than $34,000, you will pay taxes on up to 85% of your Social Security benefits. That's kind of like the general rule. And then for married couples filing jointly, you will pay taxes on up to 50% of your Social Security if you have a combined income of $32,000 to $44,000. So if you're between $32,000 to $44,000, you may be paying taxes on, or in other words, including in income, 50% of the Social Security income. If you have a combined income of more than $44,000, you can expect to pay taxes on up to 85% of your Social Security benefits. So bottom line, what you would basically, if someone asks you, are Social Security going to be included? Basically, partially, it could be included as something that would be included in income and therefore tax would be paid on it, but there's a cap at 85%, so only up to 85% of your Social Security benefits will be included. If you're single and you make under $25,000 of the taxable income, basically, then you would not be including anything in the Social Security, any of the Social Security benefits. If you are married filing joint and have less than $32,000 of income, or basically income, then you would not include any of the Social Security benefits. If you're single and you have between $25,000 and $34,000, then you must pay taxes on, or in other words, you're going to be including in income up to 50% of the Social Security benefits and therefore paying taxes on it. And if you're married filing joint and you make between $32,000 and $44,000, that's combined income, then again, you'd be paying up to 50% of the Social Security benefits. If you're single and you make above the $34,000, then you could be paying taxes on up to 85%. In other words, up to 85% of the Social Security benefits would be included in income and therefore tax would be paid on it. If you're married filing joint and you make over $44,000, then you could be including up to 85% of the income in the income line item and therefore be paying taxes on it, typically at the ordinary income tax rate, the standard progressive rates. So we'll take a look at some examples in the software just to make this a little bit more concrete. You want to have kind of like the general rules down, so when you talk with clients and customers about Social Security benefits, you can have the general concepts down. Then, of course, the calculations within the tax software will help you to get down to exactly what needs to be calculated on the actual tax return.